Good morning, everybody, and happy Wednesday. We'll get going in just a minute. I hope everyone's doing well. And I hope you can hear me as well in terms of the audio and visual here. I think we're good from what I can see. So that's good. All right, perfect. Let's get started, everybody. We're here on a Wednesday. I've got a few things I want to go through. This is our, if you're here for the first time, welcome. This is our Set the Market morning call here for a Wednesday morning. It is Wednesday the 8th of October. Everywhere I go and look, it's looking more and more Halloween-y. This morning they were handing out like pumpkin spice lattes at the grocery, fancy kind of grocery store that I walked past. So well caffeinated, tackling this day. If you're here for the first time, thanks for being here. I really appreciate you tuning in. This is our morning call. We're going to spend the next 10 to 15 minutes going through some of the top things on our notepad here. Before we get started, I would really appreciate if anyone that's watching here today, if you could subscribe to the channel. Obviously, it's free. It allows you to get updated in real time when we do fresh analysis, podcasts, ideas, charts, what have you. And with that in mind, let's get started. Also, if you could always give us a thumbs up like on the videos and leave a comment, that also helps the algorithm be able to pick it up. So let's start off with one chart that I wanted to continue to point out to people because I think it's critical to understand what's going on. So we've talked about this chart now for, I've been pointing out for several months because I think it's what's driving markets. However, we're also seeing something happening in the near term here that is getting my attention. And that's the following. So we've got three lines here, basically two different charts. You've got the chart at the bottom there, which is the US dollar. This is really, really important to understand. So you've got the US dollar there at the bottom. And at the top, you've got two lines that are going up together, meaning they're both going up together, not like tick by tick, but they're going up together. And so basically the chart at the top in blue is the NASDAQ 100. You can see basically it's been going up at the expense of the dollar going down, right? So your purchasing power, if you're a US dollar denominated investor or if you live in the US dollar, as you're spending currency, then you've lost purchasing power. If you own some assets, then that's been less bad, but still you lost purchasing power. Dollar's down about 10% year to date. The orange line, this is really, really important now. I'd like to spend a few minutes on this. The orange line is the price of gold. And you can see the price of gold has gone up as the dollar has gone down, just like the NASDAQ has gone up as the dollar has gone down. We've talked about this. Do you guys remember me talking about this for months now, right? I'm sure you do. If you do, please let us know. However, what's happening now, I think, over the past few weeks is making not just me, but a whole bunch of investors a lot more nervous. Maybe nervous is the wrong term. I don't want to sound alarming. That's not my thing. I'm always very open to whatever the market might bring. But something that I'm watching very closely, and that's the following. If we zoom a little bit closer into this, and I'm going to make the bottom chart a bit larger or zoomed in so you can see, you will notice that the dollar actually, and I know a lot of people aren't paying that close attention, is actually up over the past 3 weeks. So up, right? That's this line. It's actually not down. The NASDAQ over the past few weeks, it's up, but like not much. Like it's essentially sideways. So that's the blue line on your screen up there. It's not up by a ton. What is up a lot is the price of gold, okay? So that's basically this orange or golden line, right? No pun intended, is up a lot. So now you have to think about this. What does this mean, right? So over the past few weeks, all the people that have correctly pointed out, including admittedly ourselves, right, that the dollar has gone down and that has benefited basically risk assets, right? So again, Bitcoin, for example, equities, the NASDAQ, and also gold. But that argument does not stand for the past few weeks, right? The past few weeks, the dollar has rallied. And this is, if you guys remember, for the past few weeks, I've been saying the most important thing, I've been saying this a lot in the mornings, the most important thing I'm watching, the three most important things I'm watching is the dollar, and the dollar. You guys have probably heard me talk about that, right? And that is very much how I feel right now. So I feel like the dollar could start to bounce a bit harder here. If it does, then we could start to see maybe some weakness in the equity market. And again, I say that within well respecting the broader bullish trend. What is way more concerning, though, is that the price of gold, again, that's the golden line right up there, and once again this morning it's up 1.5% or something like that, surging past $4,000, is actually rallying very sharply despite the fact that the dollar is bouncing. So the dollar debasement trade, that argument in the very near term does not stand. Does that make sense to everybody? Right? So this is really important. Now, I want to continue with this a little bit more, with this thought, and move on over to a more sort of broader analysis of the gold. And if I said oil, I apologize. I meant, of course, the price of. If I said oil, I meant the price of gold. Obviously, is the yellow line up there. So where does it leave us with gold? Well, first of all, let me just quickly put this into perspective for those people that are brand new to what we do. The price of gold, I think everyone that's been following us for some time knows that we've been unbelievably bullish on gold. It was up until June by far my largest position, and I continue to see gold in a very bullish trend. So that's this green background color. You can see gold turns into a bullish trend in January of 2024. Okay? So that's the trend, and the trend I don't think has changed. I think the trend will be higher, but I do think gold can correct. I think gold can easily correct 20-30%. I'm not short gold, certainly not yet. I still have some gold. I have a third personally. I've told you guys here this in real time. This is not advice, just me personally telling you. I sold 2/3 of my gold position in June. I bought it in September of 2023. I was very public about that. And I still have 1/3 left. And I like it long term, but I'm more and more concerned in the short term. So, however, our trend following model remains long-term bullish. That's the green background color. So that's why I want to certainly get back into this. Okay? So the short-term momentum, however, in gold remains bullish as well. So that hasn't changed, but on the charts I'm about to show you, you'll see that it's starting to get a little bit more concerning. So this is our momentum indicator, the trender, which hopefully you all are using. You are likely, going to find it more difficult to swing trade and momentum trade unless you have a proper momentum tool. But you can see the latest momentum buy signal we received in gold was on the 25th of August, and that momentum remains, right? Gold is up 15% or so since then, and that remains. So I wouldn't want to be short gold, but I'm getting a bit more concerned because it's also getting very stretched. The long term is really kind of what I want to point out here, where as it matches up with the short term. So this is now the price of gold, right? You can see this is a multi-year chart. So we've had big bullish trends, and when it gets to the upper end of the range, it tends to consolidate. And the latest big uptrend in gold, of course, started in roughly in late, sort of early September or early autumn of 2023, and then it really became a bullish trend in January 24, which is also when our market rover trend following model started to pick up this trend. Now, however, we are reaching the very upper end. In fact, we're actually overshooting the very upper end of the trend that the gold has been in basically since then, since let's call it autumn of 23, through January of 24. That trend has remained. We've now had a very, very steady move to the upside, and we're even, if I were to go in closer, we're even now sort of trying to overshoot the very, very near-term momentum move that we had. So this is the momentum move that I showed you before. That's this one here. And again, you can see our trend or momentum indicator. It gave us that buy signal right there in August, which lines up with this when this whole move started, right? So very, very, in this case, very accurate. I personally would be more careful here about gold. I haven't shorted it. I'm not there yet, but I'm increasingly watching this very closely to maybe see a situation where I would want to maybe I'm likely going to keep my last 1/3 of the gold position, but I might look to buy some puts, or most likely I'll short some futures against that once I start to see some real actual weakness up here develop. At some point it'll happen, I just don't know when, right? But so hopefully this is important. Does everyone kind of see what I'm trying to say? You may agree or disagree, of course, right? But that's sort of our view. Now, the question, of course, is if we do see some sort of a consolidation period, how far could we see the price of gold drop? And I think we have to just understand that when we see these breakouts, there typically tends to be some sort of a consolidation. So whether we look at sort of this breakout, or we look at obviously that one there, which we'll get to, or you look at this one, ultimately there is some sort of give back of that move, right? It doesn't have to be huge. It can be, quite frankly, it can be as little as 5%. But I think given what we have right now, I think we have to be open-minded enough in the nearer term, right? This is not a long-term call. This is a near-term call now. We have to be open-minded that gold could easily correct back into the mid-3000s. Again, I have no trade on that yet. So full disclosure, as I just mentioned several times, I'm very bullish gold long-term. I've closed 2/3 of my long position in June of this year, but I bought it in September of 23. Again, it's all documented. I've been mentioning it here in real time. I have 1/3 left, and I'm looking to see if I can sell some futures or buy some put against it. I haven't done it yet. Okay, so just anyway, I hope this is helpful. That's really what I wanted to do here today. One more thing I want to show you today. We're looking at pre-market activity here. The futures are pretty flat. I do want to just quickly point out what happened yesterday in the equity market. So I'm going to quickly, let me see if I can just make some, if you give me 1 second, I'm going to, so I'm going to take a quick screenshot of this. If I look at the NASDAQ 100, I just want to quickly show you this, right? So yesterday we had what's called an outside reversal day in the NASDAQ 100. That's, again, not to be grizzly bearish. It's just, I'm just pointing out facts, right? We had, the last time we had a real outside reversal day in any meaningful fashion was on the 31st of July. Only led to basically a one-day drop after that, but that drop was about 2.5% after that. So I just wanted to point this out here. Hopefully this is helpful for everyone to see. An outside reversal day is basically when you see the price range of an intraday measurement. So in this case, yesterday's price action basically fully encapsulated the previous day's price movement, which was the previous days, which was Monday, was that little one there, right? So this was yesterday. The arrow is pointing at this one, and the Monday's price action was there. So that's what I want to point out. I hope it's helpful. And again, as always, if you give us a thumbs up, that would be awesome. And we look forward to seeing all of you guys back here tomorrow morning in Trade Ops, and if in Set the Mark. And if you are a Trade Ops member, we will see you over there. See if we can't do some trades here today. Thanks for being here. Please subscribe. Please give us a thumbs up, on all the videos. It really helps us to be able to continue to do the show. And we'll see you guys back here tomorrow. Take care.